Have you ever wondered how the multifamily real estate sector can drive a significant increase in housing starts and spur economic growth? Welcome to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. Let's get right to it. In a surprising turn of events, new residential construction in July witnessed a notable increase, with housing starts rising by 5.2% to reach a 5-month high. This uptick brought the total to 1.428 million units on a seasonally adjusted annual basis, climbing from 1.358 million in June, as reported by the United States Census Bureau. This growth marks an impressive 12.9% increase from the July 2024 rate of 1.265 million units. While single-family housing starts experienced a modest 2.8% monthly gain, the multifamily segment truly stole the spotlight. Multifamily starts for properties with 5 or more units surged by an impressive 11.6%. However, residential permits showed a slight decline, dipping by 2.8% to 1.354 million from the revised June numbers, which stood at 1.393 million. This increase in residential starts defied many economists' expectations. Economists polled by Reuters had estimated July's housing starts at 1.29 million, with a slightly higher permits estimate at 1.386 million. Odeta Kushi, the deputy chief economist at First American, noted the monthly increase as a welcome development. However, she emphasized the need for sustained gains to demonstrate continued progress in single-family home building. Kushi remarked, "The housing market remains structurally undersupplied, and we need more hammers at work to build the homes that are still in short supply." She also pointed out a concerning trend where builder sentiment receded further in August, marking the 16th consecutive month in negative territory. This information comes from a survey conducted by the National Association of Home Builders and Wells Fargo. To bolster demand, builders have increasingly turned to sales incentives, with 66% of builders reporting the use of incentives in August. This figure is up from 62% in July and represents the highest share recorded in the post-COVID period. Builders are facing persistent supply-side challenges and intensifying competition from a growing inventory of resale homes, as noted by Kushi. Without meaningful improvements in affordability, the outlook for the single-family sector remains constrained, she added. Let's shift our focus to a pivotal force reshaping the Canadian real estate landscape, Lankin Investments. In a recent analysis, Ray Pun, the president of capital markets at Lankin Investments, shared some insightful perspectives on the current state of real estate investing in Canada, particularly amid the country's shifting housing dynamics. Since 2014, Canada has experienced a population surge of over 16%, with more than half of that growth occurring in just the past 3 years. This rapid influx has concentrated in urban and mid-sized centers such as Toronto and Vancouver, significantly increasing housing demand. In response, governments at all levels have rolled out initiatives aimed at unlocking purpose-built rental supply. These initiatives include the elimination of the goods and services tax on new rental builds, low-cost MLI select financing through the Canada Mortgage and Housing Corporation, and the Housing Accelerator Fund. The policy environment is clearly prioritizing long-term rental housing as a national necessity, and this focus has created a rich opportunity for investors. According to Pun, this environment has fostered an investable segment with substantial potential for scalability. Rental housing, often undervalued compared to condominiums or commercial real estate, is now being recognized for its economic value as an income-generating asset. This shift offers investors a policy-supported, demographically driven solution to meet current market needs. Pun also highlights a broader realignment of risk and return in the market. Fixed income is making a strong comeback, while alternative assets are claiming a larger share of institutional portfolios. For investors, this means reevaluating asset allocation could be crucial in unlocking long-term value in their portfolios. As we navigate these changing tides in Canada's housing market, it's clear that multifamily and rental housing are at the forefront of this transformation, offering both stability and resilience against inflation. Thank you for listening to the Multifamily Real Estate Insights podcast. I'm your host, Sandy MacKay. See you on the next one.